Hi, this is Andy Hoffman of CryptoGoldCentral.com, which publishes a daily cryptocurrency blog and provides professional crypto consulting to individuals and altcoin developers alike. In today's one-on-one episode, I'm honored to have Simon Dixon with us, given how much knowledge he imparts and how beneficial his efforts have been to the Bitcoin community at large, to the point that unquestionably he is one of its most valuable assets. Today is a very special episode, number 52, as yesterday marked the one-year anniversary of CGC's launch. To that end, I couldn't be happier with how my first year has turned out and look forward to hodling Bitcoin strong for many years to come. Simon, of course, is a former banker in the legacy financial markets who has become one of the crypto community's most diversified and influential investors. Through his BnkToTheFuture platform, his companies have invested more than $500 million in the space, and likely more to come in the coming years. To that end, Simon, welcome to the one-year anniversary edition of 101.
Awesome. Thanks for having me back. It's an honor. So it's been 52 weeks. You've done every week.
Yeah, I think there was some where I did 2 and some I did 0, but I tried to look. I see the space has gotten very, very quiet as the markets have gotten weaker, and I really just try to maintain consistency. And hopefully it'll pay off in the big picture because people really need information.
Absolutely, yeah. I mean, we've seen this before. We see video YouTube views drop down during bear markets and skyrocket during bull markets. But I think every time we reach a new bear market, the number of views that a video would have got in the previous bear market has increased.
Yeah, absolutely. Well, look, it's clearly a bear market for altcoins. For Bitcoin, it's a consolidation. We'll get to that in a second. Okay, so in this, as I call it, limbo period of Bitcoin's existence, in which hash rate, technological advancement, decentralization, and network security have never been stronger, while simultaneously global inflation rates are rising and emerging market currencies are crashing, while the previous king of store value, gold and silver, they've fallen to inflation-adjusted all-time lows. However, consolidation of last year's bubble-like price surge in the sector, as well as non-fundamentally driven sales by several large holders, has prevented Bitcoin from escaping the trading range it's been stuck in since bottoming at the $100 billion market cap level 7 months ago. Meanwhile, the altcoin market bear market rages on, led by the 2 coins that were misguidingly believed on several occasions to be the new Bitcoin, Ethereum and BCH. Simon, let's start with your thoughts on Bitcoin, the peer-to-peer electronic cash system, as opposed to Bitcoin, the financial investment. From this perspective, are we in a bull market, bear market, or somewhere in between?
In terms of Bitcoin being peer-to-peer cash?
Just in the network in general, the growth of the Bitcoin network.
So I think we've certainly volume is lower than it was before. But then again, that's hard to say because we often look at volume in terms of what's traded on exchanges. But Bitcoin is getting its true utility when it's not on exchanges because most of the exchange volume is speculative volume. But Bitcoin is going through its consolidation phase. There's no doubt about it. There's a lot of people that got on board for the money. And that's okay because the market has always been driven primarily by speculators, and then the speculators drives people in that find the utility, and then a portion of those stick around because they find the utility of owning your own money, spending your own money, and a monetary policy that rewards savers rather than debtors. And now we're in the consolidation phase. And during these consolidation phases, Bitcoin tends to reach a value based upon the perception of how many people understand the value proposition of Bitcoin. And it trades up and down, and it gets pretty volatile around here. Yeah, that's kind of where we are at the moment.
Right. But in terms of the actual, where the network stands, I mean, I like to say it's stronger than ever because of the hash rate and the network security. I mean, it would appear to me that that's where we stand, that things are as good. I mean, because people are always looking for what's wrong with the Bitcoin network aside from the price. I mean, in terms of from that perspective, is that how you view things?
Yeah, sure. And I think one of the key indicators of Bitcoin health is the level of decentralization that we can attribute to the network, which is a bit of an obscure term. There's no chart that's going to tell you how decentralized the network is, but it's no doubt the indicator for whether Bitcoin can become, this world reserve commodity that can also do many other things. And so what has been proven is that, there was, while, Bitcoin is often criticized for certain parts of its network being centralized. In the past, we've had centralization of mining as a key criticism for Bitcoin. We've had centralization of development as a key criticism for Bitcoin. But what we're actually seeing is that the network itself is in fact decentralized, because while there might be pockets of centralization, it's the only network where the miners cannot get their way, the developers can't fully get their way, and the different other parts of the ecosystem can't get their way. And Bitcoin, the reason it's taking its stand right now as world reserve cryptocurrency is because it's the only one that's decentralized. You can't point to a founder. It has less attack vectors than any other cryptocurrency. And now it's got more technological innovation as we move forward to the next phase, where we're looking at scaling for the next bull market.
Right, and that's where we've seen the development right now of all the technology, which last year couldn't get done because everyone was so focused on the on-ramps and getting and trading, and not really focusing on the actually building the network. But as far as centralization, I mean, we talk about, I mean, all of last year, even up to very recently, it was like, well, Bitmain is going to, and we'll get to Bitmain in a second, but Bitmain is a major problem because of its centralized nature, how it's holding so much of the network. Now we're at the point where Bitmain is not only being caught up to by so many other people entering the space, but Bitmain itself is having problems. And of course, the price does matter. We'll get to it in a second. But yes, the price absolutely matters. And that's why I am very curious to see where, did we bottom? And we hit $100 billion back 7 months ago, and we've held staunchly above that. And the price does matter because during this period of consolidation, as you say, there's a value that it reaches based on the group perception of where Bitcoin is, which appears to be right now about $100 billion. So we'll see if that level can be maintained. So to that end, I want to move over to the investment aspect. And as I see right here, we're having a difficult time this morning, even during the show. Bitcoin down to the low 6,200s, but it's really the altcoins which are causing the biggest issue here, and we'll get to those in a second. So again, the Bitcoin bear market, the way I see it, you can't say that we're still in a bear market until we go below the bottom that was reached 7 months ago at $100 billion market cap. And since then, as I call it, the Bitcoin Energizer Bunny has been through absolutely everything and continued to keep ticking. We've had the Mt. Gox trustee selling, even a Mt. Gox whale recently selling, the SEC denial of ETFs, Bitmain liquidating its Bitcoin, and all kinds of other things, including Vitalik Buterin himself casting shade on the entire Bitcoin, on the entire cryptocurrency community. So with all this in mind, Simon, what is your current view of the investment market? Are we still in a bear market for Bitcoin? And what kind of variables are you looking to in the near term, or even in the intermediate term, to determine which way we move?
Yeah, I mean, I don't see Bitcoin hitting, a big upward trend for a while now. I think we're at the phase we're at right now is people don't know what the fair value of Bitcoin is. That will always create some kind of volatility up and down. But I think we're just going to be in a sideways market for probably the rest of the year and moving on into next year as well. And a sideways market might be, but then there could be some, Bitcoin's always been some kind of major fundamental shift, like, everyone's obviously looking out for things like ETFs, but some kind of major shift that drives new money into the market is always a factor that the market looks for turning it around. Or you just return back to the plain old economics, and the plain old economics are leading into halving into 2020. So the economic model shifts slightly, and that tends to get factored into the price a year before. So 2019, you'd expect some of that to get factored into the price. In the meantime, all the newbies that came in and entered the market in 2017 are kind of, they'd fall into two camps. I think they either entered the ICO market and either made their money and got out, or they got burnt. And if they're staying in crypto, which a percentage of them will always stay in crypto, then the flight is moving towards Bitcoin, which is why the dominance index is going up. Because people are, if they want to stay in crypto, they're either going to Tether, which isn't really crypto, but it keeps you in the crypto market, or they're going to Bitcoin. And so, you know, as the other markets get worse, you imagine that creates a constant buying pressure for Bitcoin versus the other cryptos.
Right. And again, I'll note again, past is not prologue, but we talk about the Mt. Gox debacle. It took 9 months for Bitcoin to bottom after Mt. Gox. We are now in our 8th month since the price of Bitcoin topped in December, and in fact we actually bottomed in terms of market cap way back in February. So I'm just curious how things are going to go along, because clearly the situation was a lot different back then, and it's a lot more bullish for Bitcoin's fundamentals than they were in early 2014. When you talk about the economics, of course, we know the halving is coming, and right now no one is even thinking about it. I bet most people in the space don't even understand what it is yet. How do you view mining costs? I've spoken to Francis Pouliot about it, and he's talked about how it's a moving target. But where do you think the overall mining cost is right now? And does that create a price floor, kind of like the mining cost of, let's say, gold and silver?
I think it does, but we've also seen in the past that Bitcoin can get fairly irrational. We've seen people mining for extended periods in bear markets at a loss, and they're willing to do that because once you've expended a significant amount on building some kind of infrastructure to mine Bitcoin, then you're kind of stuck in it at that point. And so that's why the security is so high, because so many people have made that plunge and made that investment. And the cost of mining a Bitcoin is a very tricky one to answer. And I think Francis is as good as expert as anyone to answer that question well. And I think it does vary across different people and different players depending on their position and place. Bitmain has traditionally been one of the very large players in that market. And they've exercised, a strategic advantage as being the main chip manufacturer as well as one of the larger miners. But it does look like that dominance. There's more institutional players entering the mining market, and there's more larger companies entering the manufacturing market. And I think we're going to see more and more efficiency there. But the security of Bitcoin just tends to continue. Despite the fact that the markets, and I guess you could see that as some form of a leading indicator. But again, once you've made that capital expenditure, your incentive is to continue mining, and if you can invest new US dollars into the company and keep those Bitcoin, then it should be a good bet. Yeah,
I've seen the mining costs. I've seen numbers 5,000, 6,000, but again, it is a moving target. And again, as you say, there's a lot of sunk cost in this, a lot of sunk cost that went into it this year. And a lot of it is profitable. Some of it is not. Some of it went into the game, not even close to profitable. I mean, I've read that in Korea, it cost $20,000 to mine a Bitcoin. I don't know if that's true. And then in Venezuela, where, you could get arrested for doing it, it costs almost nothing. So the fact is, there definitely is a mining cost. It is definitely significant. It definitely provides some support, but it's difficult to determine how much. I only bring it up because some people like to say, well, there's no cost basis. It's printed out of thin air. And as we know, Bitcoin is one of the more difficult commodities to produce from a cost standpoint. So on the topic of the altcoin headwinds, which frankly is, to me, the biggest issue in the market right now. Everyone's staring at the price of Bitcoin, but it's really the altcoins, because this is where they are kind of being exposed. Anything that doesn't have a use case is being exposed, and things that may have use cases are also being hit equally hard. So first we look. I want to talk about two in particular. I want to talk about the two biggest coins. I don't even consider Ripple a coin in all cryptocurrency. We have Bcash. Okay, clearly it faces an existential crisis. Bitmain has publicly disclosed that it was in fact supporting it in Ponzi-like fashion, to the point of putting its own liquidity at risk, and it even may be split into two. Roger Ver has gone silent pretty much. And, there is a potential at 7+% of a Bitcoin of another significant decline. It has traded as low as 3 or 4% in the past. Then we have Ethereum, which on multiple occasions was expected to flip in with Bitcoin. It had a lot of Main Street and Wall Street support, but I think a lot of that was faux support. It just was a sexy investment that most people didn't know about. And now when you have even Vitalik bringing down, I mean, he's talking about what everyone knows, that not much is going on there, casting shade on the sector. It's really hurting altcoins. It's really hurting those platform stocks, like the ones that are trying to compete. So again, Simon, in your view, what is your view on the future of Bcash and Ethereum? Have they peaked in terms of their price and the perception of their futures by investors? And in the extreme case, can they be considered Ponzi schemes, or is this just a cyclical decline and they'll be back better than ever in the future?
So let's start with Bitcoin Cash. I guess the background behind that, for those of you that don't know, I'm sure your view is a very the people that are stuck around to listen now are probably very familiar with it, because I don't think we're dealing with too many newbies anymore. But the whole philosophy behind Bitcoin Cash was to create a cheaper and faster version of Bitcoin, which, by the way, is something that people have been doing ever since, well, ever since way before Litecoin, I think, where people were trying to create cheaper and faster versions. But while the cheaper and faster version does have some benefits, it also has some big disadvantages in that it tends to be created by somebody, and it tends to go towards more centralization. And that's exactly what Bitcoin Cash has become. It's a very fast, cheap, yet centralized version of Bitcoin. And what we have seen is that Bitmain has become the Satoshi Nakamoto of Bitcoin Cash. And that is because Satoshi Nakamoto was the very first to mine Bitcoin when it was very centralized and no one was willing to mine it or build it. And Satoshi Nakamoto essentially was finding developers, supporting the development team, creating the white paper, mining it, trying to find businesses that wanted to do stuff with Bitcoin. Now, it was very different back then because it didn't actually have a price. It didn't trade on an exchange. And to be frank, no one cared about it other than a group of people. And so it took years for Bitcoin to get out of that and to actually build an infrastructure and exchanges and everything that came later. And because of that advantage of doing it at a time when nobody cared, it had several years to become more decentralized. Now,
doing it organically, not forced.
Absolutely, yeah. Doing it organically. There was no marketer for Bitcoin. People took the role of trying to market Bitcoin and evangelize Bitcoin. But there was no, the same people that created it weren't the people that were marketing it. And they weren't, involved in other parts of the ecosystem. So Bitcoin organically grew in that way. And that is why Bitcoin is, our world's best shot at creating sound money for that very reason. Because it is a decentralized, it has commodity-like properties. And that's why Bitcoin is where it is. So throughout time and throughout history, many people have tried to, say, well, we can create a cheaper and faster version. And the cheaper and faster version tends to come because no one's actually using it. If everyone stopped using Bitcoin, then it becomes very cheap and very fast. And so that's what tend to happen over time. But so we're talking about those 1 million Bitcoins throughout history of Bitcoin. The media has always caught on to that Satoshi owns 1 million Bitcoin. But it stood the test of time in terms of actually that wallet has never moved. There are 1 million Bitcoins in the Satoshi wallet, but They have never been moved. They have never been claimed. Nobody knows who they actually are. Now, the difference with Bitcoin Cash is that we had IPO this year, or an alleged IPO, or is in the process, in the pre-IPO at the moment, for Bitmain. Now, Bitmain was the company that created the hard fork and funded the ABC, Bitcoin hard fork that led to Bitcoin Cash. They were also the same company that was funding any companies that wanted to build anything on top of Bitcoin Cash. Most of them receive investment from Bitmain. So there was centralized control of the development. There was centralized control of many of the businesses and ecosystem. And also Bitmain was the one that was actually mining all these coins. And what it turned out, what we're seeing now is because Bitmain is going public, they are opening up the books on their holdings and making full disclosures. And what we've seen is that Bitmain actually converted or sold a lot of their Bitcoin. I think it was approximately 50,000, and now end up in a position where they have 1 million Bitcoin Cash. And so the difference with the Satoshi Nakamoto wallet and the Bitmain wallet is that the Bitmain is about to become a public company and has a fiduciary duty to its shareholders. And that fiduciary duty towards its shareholders means that they are going to have to, at some point, offload some of that risk, rebalance, and they're in a position whereby Bitcoin Cash is much more centralized than Bitcoin ever was.
I mean, so from a Wall Street standpoint, Simon, I mean, what it sounds to me like, if they even get this deal done, because everyone assumes it, I mean, yes, people want to believe. I would think that there would be money interested in their hash power. But from a financial standpoint, we know that this is an illiquid asset, and it's very possible that that money is going to come with the requirement of selling that Bcash at a huge discount and or replacing the management. I mean, that's how Wall Street works.
Well, yeah, and you got to think about it. What would happen? One of the criticisms of Bitcoin, one of its, throughout history, we've had these main criticisms. It was a currency for drug dealers. Then we deal with that. It was talking about centralization of mining in China. Then that gradually gets dealt with. But one of the bigger criticisms was what happens if Satoshi Nakamoto sells their coins. Now, we know the Bitmain wallets and the Bitcoin Cash position is known. So the second that they try and sell or move some of those Bitcoin Cash, you're likely to have a big run on the market because people are going to try and get out before Bitmain gets out. And so it's created a really unhealthy ecosystem. And it seems to me, my speculation is that pretty much anybody that was selling their Bitcoin Cash over the last year was selling them, or a massive percentage of them was being sold to Bitmain because they've now got 1 million of these things.
That's called a Ponzi scheme.
And so, a Ponzi scheme, but Bitmain is stuck with the
holding
bag.
Up themselves, yes.
Stuck with the bag, holding up themselves, and it's a pretty unhealthy position for it to be in. But it's interesting to see that over time. And so if you were selling your Bitcoin Cash, it's more than likely you were selling them to Bitmain, and Bitmain is the Satoshi Nakamoto. But what happens when Satoshi Nakamoto is actually a public company with fiduciary duty to its shareholders, where you actually know who the entity is, and they have the ability to sell those coins and move those coins at any time? That creates a really, really interesting, show for the world to watch throughout the rest of this year.
We both know it was the ultimate of hubris because even a year ago, Jihan Wu, Roger Ver thought they were on the top of the world. They thought they could literally do anything. They thought they can create a coin. I'm not sure if, I'm guessing Roger believed that he could create a better Bitcoin. It's hard to believe someone who's so deep into Bitcoin could believe that. But whether he did or not, Jihan clearly thought he could control Bitcoin with this Bcash and failed. And, I mean, I'll tell you what I think is going to happen. You tell me what you think. Look, okay, if you don't have this monster bull market, which you do not believe we're going to have all of a sudden starting this month, or a violent crash where everything goes to nothing and no one wants to buy anything related to the space. So those are the outliers. I would say we'll be somewhere in the middle, and they will get this deal done as a bailout. I mean, that's how I see it. It's a pure bailout, and the money will demand, as you said, it's impossible for them to sell it on the market. The only way that they can sell it, to me, is an over-the-counter trade that's prearranged at a dramatic, I mean, let's say the price today is $450. Maybe they sell it all for $150 to some big entity with deep pockets. I mean, and potentially the management gets replaced. That's how I feel. That's what I think the price for this blood money will be for this IPO will be. What do you think is the most likely scenario?
There's so many ways this could actually go. You know, well, I mean, let's look at, so Bitcoin Cash's goal is to replace Bitcoin and be a faster and
cheaper. Is it still that goal though? Is it still? I mean, at this point, come on.
I think the people that are holding Bitcoin Cash, that are supporting Bitcoin Cash, are still working towards that goal.
Including fake Satoshi wants to split it in two because he doesn't think Satoshi's vision is actually Satoshi's vision.
Yeah, well, there you go. And then, you know, when you build a community based upon splitting, you get splits in that community. And that's what we're seeing at the moment. But if they actually believe that, then Bitmain's either going to be, you know, it's either going to be one of the worst financial decisions. And I believe betting against Bitcoin is one of the worst financial decisions anyone can ever make in history. And that is what they have essentially done. They were in one of the most, you know, one of the most interesting positions to accumulate more Bitcoin than, you know, than most. And now they've changed it to accumulating Bitcoin Cash. And it just seems like an unreasonable bet that they made for their company right there. But if Bitcoin Cash does become cash for the world, then essentially Bitmain will become the next PayPal, but even bigger, I guess.
They'll be bigger than Apple. If Bcash takes over for Bitcoin, Bitmain will be bigger than Apple. What odds do you place on that? So,
well, there you go. But the bet on that is whether Bitcoin Cash will become cash for the world.
Right.
And if it does, the interesting thing right there is that the whole point of Bitcoin is that if it does become, you know, a currency, a world reserve currency for the entire world, then the whole point in that was that it wasn't going to be another dollar or it wasn't going to be another pound, where a centralized entity has most of the control over it. And so therefore, that's why Bitcoin's is the best shot the world will see at creating sound money independent of a government agenda. But if Bitcoin Cash does actually succeed and become cash, then it looks like Bitmain would be the most powerful and most valuable company in the world, and essentially the next Federal Reserve. And that, I think, is a very undesirable outcome and goal for what we originally tried to achieve here in the crypto markets, and therefore it won't happen. So for me, the odds are very low.
Right. Well, I mean, okay. I mean, in the big picture, Bcash attacked Bitcoin and failed. Everyone could draw their own conclusions as to what was the initial goal. I mean, we all know how the process started and where it got to now. But the fact is, it couldn't have more miserably failed to replace Bitcoin, and now it's looking for a bailout. And I think it's a tribute to Bitcoin that it took such a short period of time from when the scaling debate started to when SegWit went online to when Bcash was ignominiously defeated. And yeah, I'm curious to see. Someone will want that hash power. It's just a matter of what the price will be. Next, I want to move on to Ethereum. I mean, let's face it, Ethereum has done worse from a price standpoint than even Bcash has. It's down to 3% of a Bitcoin. It was as high as 14% at one point last year. It got to 11% during the height of the bubble in January when it was $1,500 and the market cap was $135 billion. And right now it's being exposed too, because just like Bcash is not being used, hence it's being fast and efficient. Ethereum is not being used for anything, to the point that even Vitalik admitted it. What we all can see on the blockchain. I want to know from you what your thoughts are. Is Ethereum really just another Bcash story? I mean, not in the same way, but the fact is, it got created with a perception that was completely wrong, and it has nowhere to go except way down. Or is Ethereum just, you know, once all these ICOs exit their $600 million worth of it, going to, you know, have a use case that's going to last for a long time and make it valuable again?
Yeah, so I think Ethereum is a different story to Bitcoin Cash. Firstly, it was created. I remember, I remember when it was created, and it was created with the goal of creating a blockchain specifically for smart contracts. No one really knew what smart contracts were, but at the time, everyone was talking about this concept of the Bitcoin blockchain can be used for a lot more than transfer value. And Vitalik spent a lot of time trying to create that on Bitcoin, whether it be Mastercoin or some of the other projects, and then eventually decided to create a fit-for-purpose blockchain for smart contracts. Now, many people were critical of some of those decisions because, cheaper and faster comes at an opportunity cost. But it got created. It almost didn't get created because we were in the last Bitcoin bear market, and their ICO raised, I think it was $18 million at the time, and they got down to their last pennies because they were riding out a 1-year bear market in Bitcoin. But then they eventually launched, and it turned out that this user case of ICOs and creating tokens wasn't actually, smart contracts weren't doing much. But what they did do is create disruption in the raising funding market. And people were launching their own tokens, much like penny stocks. And people were investing in those. And it was done outside of the regulatory environment. And because of that, it attracted a great deal of retail demand. In order to invest in any of these penny stocks, you had to buy Ethereum in order to make the purchase. And so that drove a great deal of investment or purchase demand for Ethereum that led it through, a bull market as well as the crypto market, as well as the Bitcoin market, and just kind of going along with the market. What it turns out, though, is I think that many of the companies that were raising funding for these ICOs were jumping on the bandwagon. They didn't know the history of Bitcoin. They weren't here for the same reasons that Bitcoiners were here. And they were here to raise money. And so it attracted a lot of the attention of startups all around the world, and just point blank scammers and opportunists around the world that were looking to raise an unchanging, a life-changing amount of funding for their ideas and for their businesses, and for scammers just for themselves. And so what we're seeing as well is that they didn't really believe in Bitcoin. So I think very few of them actually converted their ETH to Bitcoin, and most of them were holding their Ethereum. And that was working very well for them because some of the people that did the early ICOs were, raising finance in ETH, and that went up 4x, 5x in some cases.
I kind of doubt that most of those people even understood Ethereum. I think they liked the fact that they had it and it was going up in value, and therefore their net worths were going up in value. And of course they could sell it, i.e. pump and dump. But I find it hard to believe that all these token believers didn't believe in Bitcoin. I don't think they knew a thing about Bitcoin or Ethereum. They were just opportunists, as you say.
I'd agree with that, definitely, because they definitely didn't even consider that the Ethereum doesn't have a cap supply and it's an inflationary token. They didn't have a clue how that relates to the cap supply of Bitcoin and the economics and the release cycle of Bitcoin. Very few people understood those economics, but the early people, that were investing, I do remember the sentiment at the time. Ethereum was funded by the Bitcoin community in Bitcoin. And many people were skeptical about the inflationary nature of it because they were comparing it to Bitcoin as a currency. And people were really skeptical about that at the time. But anyway, the Bitcoin community funded it because there was a love of the technology at that time, and the innovation and disruption that could come for that. This was before the big bucks were being made. So no doubt about it, they didn't know what Ethereum was. They didn't know what Bitcoin was. They didn't know how that worked. But now what we're seeing is that when you're stuck on a big pile of Ethereum, all those people that raised the funding and willing to hold it, which was contracting the supply and creating the demand, are equally going to do that on the way down. And so we're going to see that people are looking to sell those. Just going to charge that, my laptop. Okay. you know, what we're seeing on the way down is that the people are seeing their 30 million that they raised in their ICO become worth 20 million, become worth 10 million. And they're getting out before it becomes worth 5 million, 2 million, 1 million. And they were a normal, you know, fundraising Series A that they might have achieved. And so, yeah, we're seeing a real cyclical nature. When it goes up, people are willing to hold it. When it goes down, people really need to dump it just to maintain that. And that's why we're seeing, you know, the other thing, which is people moving to Tether now. They're looking for the stability of the dollar, but they're looking to stay in crypto.
Tether and the new Gemini dollar. And again, you know, people, I use the word Ponzi. I've been around, you know, markets a long time. Ponzi's come in many different forms. Some are meant to be in the beginning, like a true pyramid scheme, but some turn into them. Bcash, Bitmain turned Bcash into a Ponzi scheme when they realized they were the only entity capable of keeping it up. And the same goes with Ethereum. It was certainly not created to be that way. Like you said, they created it to have this blockchain for smart contracts, which was, well, A, it's before its time, and B, we now know that Bitcoin can do that too, except no one's doing them. But what it turned out to be was a platform where people funded themselves with Ethereum to create these tokens that no one wants. And it's at the point where it's a Ponzi where there is no Bitmain. There is no one to buy from all the ICOs that are selling their Ethereum. And as a result, we probably will go back to 1% of a Bitcoin. I don't know. You know, I guess my final question is, I mean, I think you answered on Bcash because, you know, you're saying if it becomes the cash of the, it's not, we know it's not. Can Ethereum be relevant in a world where Bitcoin can do smart contracts though?
Well, I do think that Ethereum has, well, you know, it is nowhere near as decentralized as Bitcoin because of its foundations, because it wasn't created by an anonymous person, and because it was created in a time when there was mass speculation and vested interest and pre-mines and all that type of stuff, and a centralized person that you can point to for that. So that makes it a very different beast. But comparison to something like Bitcoin Cash, it is a lot more diversified. It's a lot more decentralized and distributed, and therefore it is. I think it does have some value as a public blockchain. Whether the technology is sustainable or not, it certainly looks like the economics, you know, have lots of questions and lots of scaling solutions. But then so did Bitcoin in terms of the technology and the scalability. And one by one, you know, the developers would overcome those problems one step at a time. But there is another wave that I think is due to come, which is that a lot of the traditional assets and securities are going to be tokenized. And so therefore, we've got this whole, they're talking about the third wave, which is the securities token wave. And it looks like people are either going to have learned the lesson and they're going to start looking at some of the technology, whether it be a rootstock or whether it be a liquid network on top of Bitcoin. There's going to be, you know, there's going to be competition within the you know, the public blockchains, as it were. And I guess you've got Ethereum second, Bitcoin first, and there's going to be competition there. The tokenization is definitely going to become a big thing, in my opinion. And the reason that people are, you know, there's a new stable coin being invented every single week is because when you start using these public blockchains to disrupt capital markets, then at the same time with these fiduciary duties, the next round of regulated ICOs are going to be sold as securities are also going to be integrated with stable coins in order to maintain some of those values and fiduciary duties. So I do think there is still an upside for this, you know, whenever the bottom comes in, there's still an upside for people using Ethereum. But this time it's going to be competing with some of the technology that's being built on top of Bitcoin, and then the plethora of other, you know, things that have come along to compete with Bitcoin, whether it be something even more centralized like EOS that has a big community and people that believe and want to see that work. You know, and so, yeah, I think there's still more to be seen. I just don't know where the bottom is going to come in and what the natural price of these things are.
Right. Again, we get used to big numbers. So we think, well, today's valuation for Ethereum of 19 billion is small compared to 135 billion where it was, but 19 billion is a very, very big number. And as Simon is talking about, we're talking about a huge headwinds in the near term. I mean, the things that he's talking about here, like, the next wave tokenization, that's not happening anytime soon. Right now, we have to just get through this bear market and all the things associated with it. And then, of course, the technological growth, growth and adoption use, that could take some time. So right now, Ethereum at $19 billion with 600 million sitting on ICO's balance sheets. At the same time, you have other whales out there. I mean, who knows? Maybe even Bitmain owns some Ethereum. There are some big liquidating right now. So it's very, very speculative, Ethereum right now, as to what may happen, as opposed to Bitcoin, which there's really no speculation at all. It is what it is. It has a huge community with a high mining cost and rising network strength. So now that we've discussed the big boys of the altcoin sector, though I hate to attribute anything positive to Bcash, the bigger question, in my view, is whether altcoins in general have a bright future. Now, in my view, the situation is no different than the dot-com mania, when the first wave of internet stocks were largely pumping up schemes that ultimately failed, ahead of the second wave several years later that focused more on realistic use cases and ultimately yielded several major winners. Actually, more than several, many. Simon, do you believe the altcoin sector as a whole plays a useful role in the crypto universe, thus justifying its current valuation, which is still far higher than a year ago? And if not, will it one day play a crucial role?
Yeah, well, what we've seen is a token or an altcoin never actually dies unless it gets delisted from an exchange. And I guess you could classify death as being delisted from all exchanges. But while there is, while it is listed on an exchange, and while there is these little altcoins and little that have very small liquidity, there will always be someone that wants to capitalize on that as a way of trying to make more Bitcoin. And so I think these markets, as long as there are exchanges and as long as these altcoins are listed on exchanges, I think there will always be a market for speculating as a route to try and make or lose more Bitcoin. And so that's one of the interesting things of this new phenomenon, I guess. But I think the trend will continue as well, that whenever we're in a bear market, people will flee to Bitcoin, and all the altcoins will dump harder. But I think it will be interesting to see what happens in the next bull market. My guess is that you'll see a similar effect where Bitcoin will be this slow and steady store of value, safe asset. And in times of bull markets, people look to create more speculative and jump on the speculative bandwagons that come. And they'll probably pump with a much higher degree of risk than Bitcoin will during the next bull market, sorry. So we'll probably see in that cycle. And that is the cycle that the altcoins dump and pump faster than Bitcoin, but Bitcoin is the world reserve cryptocurrency or cryptocurrencies.
Right. But they can't survive solely as tools to speculate on so you can get more Bitcoin. I'm trying to see, do you believe that it serves a role? Are there altcoins that can create their own niches and have their own value, Ethereum being one of them? Or is this a Bitcoin-centric world where everything else is destined to fail or, quote, be a test net for Bitcoin?
I don't think so. I do think that, yes, it could certainly be a test net. I do think there will be other user cases that come through that other of these altcoins will optimize for. But Bitcoin is 100% our only shot at sound money. And it can also be a lot of other things and a lot more things. And it seems to be building in that direction.
But can it be everything? Can it be everything or no?
I don't think so. I don't think it will be everything. And I don't think it's necessarily healthy for Bitcoin to be everything. I think it's okay to have these other things that compete with it in different ways for different user cases, for different niches. One thing we are seeing with Bitcoin is that it is creating a lot of regulatory capture right now. Regulators and governments all around the world are using the blockchain. And when people want to cash out to fiat, and they have to disclose their KYC in order to purchase a house, they're going to have to do their source of funds, source of wealth. And once you disclose a Bitcoin wallet address in order to make that purchase and cash out to fiat, then they're looking at your entire history. And that is, something that they're actually doing, and then trying to trace that back and see where it goes. So there is still user cases for privacy-centric coins and improvements upon Bitcoin itself as well.
Right. And I use a case in particular like Steemit. I mean, because I don't expect that Bitcoin will ever become a social media platform like YouTube. I mean, I guess it's possible. I mean, a maximalist per se will say, well, something like that will be subsumed into Bitcoin. But I'm trying to ask at least, is it possible that there are niches that will never be something Bitcoin can do?
Because Bitcoin, because it is decentralized, it's ultimately very, very hard to change, which is why it derives a lot of its value. Because it's so hard to change, as we've seen with the scaling debates throughout time, that is the very reason that makes it the great user case for sound money. But that doesn't necessarily make it a great user case for something where you do need to have fast change. Now, I recognize the irony in that statement, because the whole purpose of a blockchain is it is meant to be censorship resistant. But we seem to have moved into this world where blockchains are allowed to change and be more nimble, and they're calling those blockchains. So I guess we need some new terminology. It's why they created these silly words that have come from it, like distributed ledger and private blockchains and all that type of stuff. But I do think that technology will be used for other things. And Bitcoin, we want it to be hard to change. We want it to be censorship resistant. If it's easy to change, and it means that some of the decentralized property of Bitcoin are going away.
Right. Absolutely. And again, no one knows what the future will hold. I'm just saying that when I think of Bitcoin maximalism, I think of it in terms of sound money. I think Bcash and Ethereum to an extent proved you just can't challenge Bitcoin on that. Whether you're doing it purposefully or inadvertently, Bitcoin will always win that challenge. The question is, what will a digital age world look like where there's trillions of dollars in the space? Will Bitcoin be doing everything or most things or just some? We'll see. Next, I'd like to get an update on how your business, Simon, is progressing at Bank to the Future, as in what parts are experiencing strong demand, if any, and what parts extremely weak. And based on these observations, what's your view of how likely a significant sector recovery is anytime soon?
Okay, yeah. So to give you some background, we're referring to BnkToTheFuture.com. BnkToTheFuture.com has been around as a securities business for a long time, or a long time in crypto world anyway. We funded many of the early companies that became very large, like Shapeshift and Bitstamp and Bitfinex and Kraken, and we invested in those rounds. And we gave people a way to invest in the equity of those companies. And so there's a lot of investors on our platform that own equity in some of the most valuable companies in the industry. And we saw equity become disrupted with the massive tokenization and ICO wave. And so as the ICO, as ICO started to bubble, we were investing in most of the disruption, but none of the companies were willing to offer equity anymore. And no investor wanted to invest in equity because it was illiquid and they couldn't dump it on an exchange. And so we kind of went through that trend. And now what we're seeing throughout 2018 is that all of a sudden we went from 30 ICOs applying for applications on our website every day to getting similar to where we were before, where 3 to 5 companies are applying a day, but this time they're offering equity again. And so it seems like we're going full circle where investors don't want to invest in tokens anymore, but they do want to invest in equity. Now, the timing of the market is very interesting for us because for the last few years, we've been working on our secondary market for equity, which means that the original investors that invested in the equity of some of these companies are going to be able to offer those to other investors on our platform, and people can buy and sell the actual equity in many of these companies because of the way we structured it and the way we did it and the the nature of the business and the way we've been running it over the years. And so now in October, we're getting ready to launch our secondary market, and we're seeing almost a second wave of people wanting to invest in equity of Bitcoin, blockchain, and crypto companies that have stood the test of time, that have created something, that are generating revenue, that are paying dividends, that are generating profits. And so it's a pretty exciting thing we're seeing. We're also seeing, because we allow people to invest in either Bitcoin or Ethereum or an altcoin, which is then converted into Bitcoin, or they can invest in plain old dollars. We're seeing a bit of a shift towards people actually investing in dollars rather than Bitcoin throughout the whole market. A lot of people were using crypto to invest, either Ethereum or Bitcoin, and less people using.
So basically, Simon, you're saying that people were burnt on the ICO tokens for various reasons, and as a result, they'd rather actually buy a stake. They'd rather buy an IPO if it was available of, let's say, Bitmain, than buy a token created by an ICO for Bitmain.
That's definitely what we're seeing right now, yeah.
And that demand is, as you're saying, it's in dollars, not Bitcoin, because Bitcoin is down. They were happy to invest in it with Bitcoin at 20,000 or whatever, but not at 6,000.
Yeah, so people are trying to hold their Bitcoin. There's a lot of Bitcoin. I'm seeing more people are looking to spend their ETH than Bitcoin. So people are looking to hoard their Bitcoin and spend their ETH. So we're definitely seeing that trend. But most people are not happy spending their Bitcoin here, because a lot of them do. These are a lot of our investors are people that made a lot of money out of Bitcoin in the early days, and they still believe in that story. They still want to hold on to that, and they believe in the long-term future of that. So they're spending their dollars more than they are spending their Bitcoin at these values.
Right. So the market is regressing to its prior roots right now, spending money looking for high quality companies, like the top exchanges, for instance. And they're not taking a lot of risk, and they don't want to obviously spend their Bitcoin, but they do possibly want to spend their ETH. So, okay, that's good. Let's ask just one question left. I'd only entrust such a question to a luminary like yourself. Basically, look, you're looking at the whole world out there, the whole crypto community. There's no way you can know all these big shifts in capital. I mean, like an ETF, like you say, or some other thing from, either good or bad that comes out of nowhere. What do you think is going to happen in this space in the next, let's call it, we're a year from now. Okay. We're approaching the end of 2019. We've passed the Litecoin halving, the Bitcoin halving is coming. All of this that we see today, a lot of it is in the rear view mirror. Maybe not all, maybe all. I mean, what do you expect the crypto world to evolve in the next 18 months?
Yeah, my honest opinion is we're going to see a lot more regulations. And that regulations are going to drive a lot more innovation in the decentralized side as well. So while the regulators recognize that if they didn't control the crypto market of 2017, then it was big trouble for for both the retail banking, the central banking, and the capital market side. And so they needed to implement regulations to cool the market down. It was a lot predominantly retail driven, and it was moving towards institutional driven. And so they needed to get hold of that market. And that's what, we're seeing right now. In terms of where we are from a year from now, I think all you need to do is look at the chart of Bitcoin. Look what happened after the 2013 pump. Look what happened throughout 2014, 15, 16, and beyond. And I think you're going to see something very symmetrical. And I think that's exactly what we're going to see throughout 2019 and beyond. So, the history tends to, it certainly feels very similar to how it did before, except for there's, millions more people that have touched this market, been involved in this market. There's a few more zeros on everything in terms of difficulty rates, in terms of adoption, in terms of exchanges, in terms of trading instead of infrastructure. And so you're just going to see a similar thing to what we've seen for the past. And hopefully you're not going to be one of those people that are going to sell your Bitcoin at these, at these low values or whatever comes next. And you're probably, if you're going to be doing that, you'll be the same person that's buying it towards the peak of the next of the next wave. But there's no doubt in my mind that the invention of money that you can own, that you can spend, will definitely reward the saver because of its monetary policy. And Bitcoin's the only game in town for that. And that sound money game theoretical situation of central banks owning it, I think, is going to play out as well. But then at the same time, I think we're going to see some disruption in capital markets. I think whether it be the big banks and the coming along and some of the technology they've been building on blockchain coming to fruition, or the decentralized movement taking over a lot of the ICOs, but actually being done in a decentralized way, or in the centralized way, there'll certainly be securities token and assets are going to touch this blockchain industry. And I think we're going to see a lot of that throughout 2019.
Yeah, I mean, you're talking about a lot of very big picture topics to me, and to a lot of people obviously watching, to everyone watching, and everyone who's going to watch. The big question, though, is because again, with altcoins, there's really no way of knowing. A lot of them are .coms. A lot of them will go to their theoretical zero, and even the big ones, as we talked about, have some major headwinds that could cause dramatic declines. Of course, dramatic declines in, say, Bcash or Ethereum or altcoins really has little to do with what Bitcoin ultimately does, because Bitcoin is the only true cryptocurrency, and it's the one where the world is building upon. Everything else is peripheral. So my big question is, everyone, we had a low after Mt. Gox, $200. I guess the market cap was extremely low because really not many people knew about it back then. But the big question is, can we hold the lows from February? Can we hold a $100 billion market cap in a world where institutions have entered the game to the point where we have futures, where we're talking about ETFs, where Samsungs are becoming mining chip manufacturers, where Bitmain is going public, all these things? The big question, Simon, is Bitcoin, and will Bitcoin prove itself to be a true asset class by proving that this $100 billion is the bottom or whereabouts?
It may not be the bottom. It may be. It's very hard to say. It certainly feels right now like there are still some weak hands that need to be shaken out. The institutions are certainly ready to buy when they think that this is the bottom. No one knows where the bottom is yet. But to me, that's just all short-term speculation. It doesn't really matter unless you're about to retire and you need to sell your position in order to retire. This is just encouraging people to remember what many people learned from being involved in this industry for a while, is that the longer you save, the more you're rewarded to this date. And I do remember there was that 1 year where you weren't rewarded if you saved. And I think this is one of those years, and I think next year will be different.
Right. Okay. Well, I mean, it just shows that hodling has been the one strategy that works. And the reason that I'm here doing my podcast every week, and why Simon does all the things that he does in the community and in his business, is because he believes, as I do, that Bitcoin is the best monetary invention, whether it's man-made or natural, in history. And so we hodl on. With that, we'll conclude today's podcast, featuring one of the industry's most knowledgeable educators and successful entrepreneurs, Simon Dixon, who can be found on Twitter at SimonDixTwit with 2 T's, and his website, BnkToTheFuture.com, which does not have an A in the word bank. As for me, please check out my daily blog at CryptoGoldCentral.com. Follow me on Twitter at Andy_Hoffman_CG, or contact me at ahoffman@CryptoGoldCentral.com. Thank you, Simon, and thanks, everybody. Have a great crypto day.
Thanks for having me.